discussion is TCS on sale of goods. Now, TCS is not something new. We've been collecting TCS on various goods and services, and many specific businesses and in general businesses on scrap, etc. We all have been collecting TCS. But now this new subsection is there whereby we have to collect TCS in case of receipt of more than 50 lakhs from sale of goods. And a lot of discussion and debate is going on how it is to be handled. So let us try and understand what are the issues involved, important issues. So section 206C subsection 1H states that every person being a seller who receives any amount as consideration for sale of any goods of the value or aggregate of such value exceeding 50 lakh rupees in any previous year, other than the goods being exported out of India or goods covered in subsection 1 or subsection 1F or subsection 1G, shall at the time of receipt of such amount collect from the buyer a sum equal to 0.1% of the sale consideration exceeding 50 lakh rupees as income tax. So that's the basic subsection. Now let us try and get into more details. So what was the need of this subsection? Probably government wants to bring to book various habitual offenders who have not been filing their GST or 1 and 3B in time, or not depositing tax fully, and because of that there is data mismatch and the buyers are not getting credit, etc. And it points to it that there is some evasion of GST and even income tax. So government thinks that by bringing this subsection, probably they'll be able to catch such offenders. Let us see how things happen. So let's first talk about the basics. This subsection is applicable with effect from 1st of October 2020. So it's not applicable on payments received up to 30th September 2020, and it is applicable to only a seller if his turnover is greater than 10 crore in the previous year. We are seeing for 2021, we have to see for 1920. So if the turnover is greater than 10 crores in 1920, then this provision is applicable. Obviously, if it's a new business, this provision is not applicable because last year's turnover is not available. And probably we'll have to see this applicability on the seller in every year, because in some businesses the turnover may be less than 10 crores or more than 10 crores. So it's not that once it is applicable. As of now, they've not made any changes in the section to the effect that once it is applicable, it will continue to be applicable forever. So that's not happening. So as of now, every year the seller will have to see whether this subsection is applicable to him or not, depending on the sales turnover. And it is applicable on receipts above 50 lakhs in a financial year from a buyer. And it's not that the receipts for 2021, we will have to see the receipts for 2021 only. Even if the goods were sold in the earlier year and payment has been received now, even that will be considered. Not only that, even advance payment received will also be covered for this subsection. And for threshold of 50 lakhs, receipts of the full year 2021 is to be seen, even though it is applicable from 1st of October, but whether it is applicable or not, or to see the threshold of 50 lakhs, we will have to see receipts from 1st April 2020 onwards. And the rate of TCS in this case, as you are aware, is 0.10%. And for 2021, due to COVID, the rate has been reduced even for other TCS sections also. So even in this case, the rate has been reduced to 0.075% till 31st of March 2021. And if PAN Aadhaar is not available, in that case, a higher rate of 1% collection will have to take place. And there is no provision for lower or nil rate in this case. You cannot give any form so that lower or nil rate is to be collected. And similarly, there is no option to apply to the income tax department for a lower or nil rate. Once this subsection is applicable, TCS will have to be collected at the relevant rate. TCS is to be collected at the time of receipt of consideration. It's not applicable at the time of billing, as is in the case of other subsections where you sale at the time of sale or at the time of debit. You have to collect TCS and deposit it to the government's account. In this case specifically, it's been mentioned that TCS is to be collected at the time of receipt of consideration. It's not just at the time of billing. And TCS is applicable on the total sale consideration received. We do not have to see the various components like whether it is to be collected on GST amount, etc. Whatever sale consideration you are receiving from the party, whatever payment you are receiving, that you have to collect TCS on that. And also they have clarified in Circular 17 of 20th of September that there is no need to adjust discount, sales returns, taxes, etc. Again, because it is applicable on the amount actually received by you and not billed. Now, looking to the applicability, let us see where all it is applicable. One thing is that it is applicable only on goods. It's not applicable on services. In general, also TCS is generally applicable on goods. Very few services are there. So they have said that this subsection is applicable only in the case of goods. TCS on goods is not applicable in the case of exports, imports, I mean the payment received for exports or imports, or other sections where TCS is already applicable, or in other cases where TDS is already applicable and has been deducted by the buyer. So in all these cases, again TCS under section 1H shall not be applicable. Which are the other heads where TCS is already applicable and so it will not be applicable in the case of goods? Let us see. We have 206C subsection 1, that is alcoholic liquor for human consumption, tendu leaves, timber obtained under a forest lease, other things relating to scrap, etc. All these things are there. So in these cases, TCS on goods shall not be applicable because it's already there. Similarly, in the case of subsection 206C1F, that is in case of sale of motor vehicles above 10 lakhs, since TCS is already applicable, so this new subsection 1H shall not be applicable in that case. Similarly, for 1G, already foreign remittances above 7 lakhs under LRS or foreign tour package, etc. There is a specific subsection where TCS to be collected. So under 1H, it is not to be collected. Then it is also not applicable on sales to central government, state government, local authority, etc. and also to embassies, high commissions, legations, consulates, trade representations of foreign states, etc. In all, generally these kind of entities are exempt from taxation, and that is why no TCS is to be collected on sales made to these. But it is applicable on sale to PSUs like GAIL, HPCL, Indian Oil, etc. because they are not government. University, colleges, etc. SEZ, EU, etc. Even sales made to them, TCS is to be collected because specific exemption has been given to goods exported out of India. Though even in the case of SEZ, EU, etc., it is considered as exports, but specifically in the section they are saying goods exported out of India. So even in the case of sale to SEZ or EU, TCS has to be collected under this subsection. Even sale of plant and machinery or capital goods, etc. Sale to consumer of electricity, even if the seller is government, as exemption is given to government as buyer only. So in all these cases, TCS shall be applicable under 1H. Then more about applicability. What about applicability to high seas sale? It's not applicable. Sale and installation of machinery and TDS is already deducted under section 194C or 194J. So since TDS is already deducted, it will not be applicable. Then in the case of bill discounting or purchase of bills, again it is not sale. That is why TCS shall not be applicable under 1H. And also branch transfers. But you will say that branch transfers are considered as sales in GST. In GST, that's okay. But we are now talking about income tax. Income tax branch transfers are not sales, and that is why no applicability of 206C1H in case of branch transfers of goods. Now another specific item, sale of securities, whether that is covered or not, let us see. This subsection is not applicable if shares etc. are sold through recognized stock exchanges. So listed shares, if they are sold on recognized stock exchanges, then TCS under this subsection is not applicable. But in the case of off-market deals of listed shares etc., TCS shall be applicable. Similarly, on sale of unlisted shares, because that will not take place on a recognized stock exchange. So even there, TCS shall be applicable, and also TCS shall be applicable in case of sales to whether as an investor or as a business. No distinction is to be made in these cases. Then coming to TCS on sale of motor vehicles, as you're aware that in section 1F on sale of single motor vehicle above 10 lakhs, it is covered under 1F, and TCS is already applicable. So under 1G will not be applicable in these cases. But in case of sale of multiple motor vehicles up to 10 lakhs each, but in aggregate above 50 lakhs, whether sold to a consumer or dealer, TCS under section 1H shall be applicable. So this is about applicability in case of motor vehicles. TCS amount, how that is to be calculated, let us see. Let us say that the amount received from party A till 30th of September is 45 lakhs. No TCS applicability, no TCS has been collected. Now amount received from party A on 1st of October is 10 lakhs. So the total receipt till 1st of October is 55 lakhs. TCS will obviously be applicable. It's a case of normal goods, no other specific exemption is there, so TCS will be applicable. Amount on which TCS will be applicable will be 45 lakhs plus 10 lakhs minus the initial threshold, that is 50 lakhs. So TCS is to be collected only on 5 lakhs. So 5 lakhs into 0.0575%, that is 375 rupees will have to be collected at source in this case. Now question arises whether we have to collect TCS on the GST amount, that is the total consideration received, or the basic amount only. So that has been clarified in Circular 17 of 2020 of 29 September that TCS is to be, again otherwise that would have brought into various problems in calculations, complications. That is why the government has advised in the circular also that TCS is to be collected on the total amount received. Now cases also come where we receive advance and we refund advance. So what will happen in that case? Let us see. If let us say some advance has been received and we collect TCS on that, because it's to be collected on the advance amount also, and later on some problem is there and advance is returned, what will happen in that case? In that case, you do not have to refund TCS or anything like that. The buyer will claim that TCS in the ITRs. So that is how it will be handled. Then there are certain more issues which the government needs to clarify, like whether GST is to be included or not for turnover criteria. In the turnover criteria, we have to see, obviously this will be for marginal cases which are closer to 10 crores. If we consider the GST amount, then the turnover is above 10 crores, otherwise it is below. So the government has to clarify whether for this turnover criteria, whether GST has to be included or not. And also, what will happen if sale and purchase is happening from the same person and net payment is made or received? In that case, what will have to be done? The government needs to tell us that. And also, if a person is dealing in both goods and services, and I'm receiving the payment for sometimes for goods, sometimes for services, then how that has to be accounted for? Either till such time we can maintain separate accounts in the books, probably that will suffice for in that case till such clarification comes from the government. Then it is also being told that this TCS is not an additional tax. Even in the press release, it was said that various news items are circulated in the media that it is an additional tax, which is not true. It is just an tax which the buyer can get credit in ITR. So it's not an additional tax. So let us look to Rule 37I sub Rule 2, which states that where tax has been collected at source and paid to the central government credit for such tax shall be given for the assessment year for which the income is assessable to tax. Similar to the TDS provisions or the rules in this regard. So what will happen in case of TCS on sales of last year's goods? So in this case, goods were sold in the financial year 1920. Consideration is received or the payment is received in financial year 2021. TCS is applicable in 2021. Obviously, the payment has been received from after 1st of October, and TCS is applicable. TCS has been collected at source. Now, how the person will claim that in ITR of financial year 1920, that is assessment year 2021. So probably change in law is required, because specifically it says, as we have seen earlier, that credit will be given for the assessment year for which the income is assessable to tax. So I'm filing the ITR for 1 year and the credit is appearing in the next year's statement 26AS, etc. So there will be problems. So probably change in law is required, and the government will have to allow to claim in year of collection. Now, how will we handle this TCS in accounts? Obviously, other TCS also we've been handling, but here the complication arises because some people are also thinking of using the other option. So there are two options. Option one is that they will include it in the invoice, and the option two is that raise periodic debit note. In very standard ERPs like SAP, etc., also they have given an option to include this amount in invoice, and obviously a separate debit note on the basis of payment received that option can also be used. Basically, option one is seems to be good enough, because in that case you do not have to tell the person later on this that look, TCS is applicable. Initially when the bill is issued, whatever amount, if you include TCS also, the person knows, and in general the payment is also received later on, and it's a small amount. Even in some cases, if the payment is late or some is not received, it's okay, and in the case of big corporates, so it will be difficult if they are tracking it on the basis of payments. So that is why in many cases people are going with option one, that is including the TCS amount in invoice itself. Now another issue comes when there is a credit note or debit note for a single invoice. So in that case, if the invoice as well as the debit and credit note are issued in the same month, some rejection is there, some quality issues is there, some short material is there, in that case you can adjust it with the bill. You can adjust the bill with the debit credit note, and only on the net amount you can deposit TCS by 7th of the next month. But if the credit note or debit note is issued at a later date, so no adjustment is possible. And also if it's a financial debit note or a credit note, in that case it is not for a single invoice, it is generally for various invoices. Let's say some quantity discount is being given, some payments are being given in advance or early, so some special incentive is being given. So those are basically financial credit debit notes which do not pertain to a particular invoice, and that is why it cannot be adjusted with the invoice. And so if TCS has already been collected and deposited, no adjustment is required for that. Now another issue arises on GST on TCS, whether GST is applicable on TCS or not. So the government has clarified that for the purpose of determination of value of supply under GST, TCS and the provisions of the Income Tax Act would not be includable, as it is an interim levy not having the character of tax. This is why it corrigendum dated 7th of March 2019 to circular number 76/50/2018 GST of 31st March 2018. So that has been clarified that no GST is to be collected on the TCS amount. Then another issue which arises for the corporates is TCS in E-invoice, how to handle that. And the question is where to show, because in a normal invoice that you issue to your clients, you show it in the invoice as a line item, as a separate line item, but where to show it in E-invoice? And as you are aware, from 1st of October E-invoice is mandatory for 500 crores and more, and From 1st January onwards, it will be applicable for 100 crore and more companies. And from 1st of April 2021, it is proposed that it will be applicable to all the assessees. So where to show this TCS amount in e-invoice? If you look to the GST and FAQs, they say that there is no specific place, and they will in the later updates come out with some solution, but as a workaround you can put this amount in other charges invoice level, which can be used to mention TCS where it doesn't form part of taxable value. And since we've just talked about that it does not form part of taxable value, so it can be mentioned in other charges. It can be clubbed with other charges on which tax is not applicable. So as of now, this is a solution. Probably in the later versions, they will be coming out with a separate field for TCS also. So what other challenges are there? Let us see. Updates in ERPs, etc. are taking place in most of the ERPs to make TCS as part of invoice. But most of them ERPs do not offer compliance solutions for TDS and TCS. And TCS return is to be filed every quarter, and only 15 days we get to file Form 27EQ, the TCS return. And businesses have been filing TCS returns in the past, and in most businesses it's manageable as very few entries of TCS were there. Generally scrap etc. entries were there, or for specific businesses selling alcohol for human consumption or timber etc. Only on those kind of businesses TCS was applicable. So till 30th of September 2020, TCS was applicable on these businesses selling tendu leaves, timber etc., mineral ore etc., and also businesses selling alcoholic liquor for human consumption, or those selling scrap or motor vehicles above 10 lakhs. But from 1st of October 2020, TCS under section 206C1H is applicable on all other goods also, meaning thereby that normal goods like machinery, stationery, laptops, groceries being purchased by let's say 5-star hotels etc., because there the amount is exceeds 50 lakhs from a single party, and these are the normal goods being sold by the businesses, and there will be thousands and lakhs of entries for big corporates in each quarter. Already we have so many inquiries from corporates where they are asking how to handle this mammoth entries in their TDS solutions, TCS solutions, and how they are to file the returns. So that is a problem for them. And most of the accounting packages, as I said, have been accounting of TCS is possible, showing it in invoice is possible, but there is no ready-made solution for TCS returns. So what is to be done? And in the TDS TCS software, like the WebTil TDS software, Web TDS, these kind of entries can be made like earlier you were making for scrap etc. So that was possible, but these entries are being made manually, and it's possible if the number of entries is small. If the number of entries was large and you could get a dump from your ERP and copy paste entries in Excel, again that's a possibility where the number of entries is large. But there are challenges in Excel also. First of all, the data is required from ERP in Excel or the CSV format, and huge data takes a lot of time in processing. I think we spend hours looking to the screen and even going to have some tea, coffee, and coming back, even having a lunch and going for a stroll, etc. Even after that, it keeps on processing because there is huge data, and a lot of time and effort is spent in that. So that is a challenge in Excel. Not only that, if the number of entries is very large, as in the we've seen in the case of very big corporates, and Excel also has a limitation even in the latest versions, that is 10,48,576 rows. Beyond that, what to be done if the data is more in the quarter? So processing it in different files, combining the data, again all those issues, those problems, again I think that is not advisable, because if some mistake happens, then the department will be after our lives. So what is to be done? And another challenge is there, invoice amount versus amount in GSTR1. The corporates face this problem also, that GST is applicable on freight etc., and these are part of the taxable value, but there are no GST on other charges like pure agent reimbursement and TCS etc. also. But they are part of the invoice value. And so there is a mismatch in value of invoice, e-invoice and value in GSTR1. I'll just demonstrate how. So this is the data in GSTR1 in table 4. You have the taxable value, and when you multiply it with the rate of tax, you get the tax amount, and then you total it to the invoice value. So this is how things happen. But what will happen to items like TCS? So there will be a mismatch like this. The basic amount is 1 lakh, freight is 10,000, total taxable value 1,10,000, GST at the rate of 18% is 19,800, value after taxes is 1,29,800, TCS is 97 rupees, total invoice amount is 1,29,897. When you show it in GSTR1, you are only showing the amount up to 1,29,800 because there is no separate field for 1,29,000 to show TCS, and you show 129,800. So there's a mismatch in the values what you are showing in the invoice and what is going in GSTR1. So Webtel is giving a solution for that also. We are taking the total amount, this total amount, and showing it in GSTR1 so that there is no mismatch. So what is the checklist for TCS? Let us just recapitulate. Check turnover for the previous year. If it's more than 10 crores, TCS provisions under 206C1H are applicable to you. Check whether TCS is applicable under this subsection or other sections or both. Check whether TDS is applicable in such cases. If it is so, then it will not be applicable in that case. Identify clients from whom total receipts during the financial year are expected to exceed 50 lakhs. And once the amount exceeds, you have to start collecting, or if you wish to put it in the invoice itself, so you have to start doing it from the initial level even when the amount does not exceed 50 lakhs. Or alternatively, in that case, you will have to issue debit note later on, a separate debit note where the amount exceeds 50 lakhs. You have to inform your clients via mails, emails regarding applicability of TCS with effect from 1st of October. And you have to ensure that suitable changes are made in the ERP or the accounting package for including TCS amount in the invoice value. And obviously the option of issuing debit notes is already also there. We also have to create a separate ledger account in the books TCS on receipts from sale of goods under current liabilities. And preferably we should keep it separate from other TCS which is applicable on sale. And also integration in ERP for seamless integration of TCS data. And obviously we have to deposit TCS by 7th of the next month and file TCS return in 15 days from end of the quarter. So with all these challenges, it will be quite difficult for corporates to prepare this data, deposit TCS on a monthly basis and file TCS returns in 15 days from end of the quarter. Webtel, as you are aware, is offering various corporate solutions for GST compliances, e-waybill, e-invoice, TDS, etc. And now it has risen to the occasion, and it is also offering integration with various ERPs like SAP for TCS calculations and filing of TCS returns. And how that will take place, let us see. From SAP or other ERPs, we will extract data through T codes and take this data to a FTP location. Then the Windows services will be working, and from there the data will be going to MySQL staging and also to WebETDS database, and from there the data will go to the WebETDS software, and from there, as we prepare generally returns for TCS, TDS, etc., from there we will generate a valid FView file which can be uploaded at the department's website or submitted at a TIN-FC. So a very simple process, and with our expertise and experience, we are able to do these things in a very short span of time. The implementation also, and even the generation of the FView file containing hundreds, thousands, and even lakhs of records are being processed very fast. So that will be a seamless integration with your ERP like SAP, and it will help you tackle this TCS issue with a smile and not with a lot of problems. These are the contact numbers of our people, senior people who will help you in this TCS tackling of TCS implementation, etc. in Delhi or in outstation cities. So that was all I wanted to share with you. Thank you so much.